Hey, everybody. John Spiokla here, and we are here for our Growth Innovators Speaker Series. I am delighted to have a guest today, Kimberly Goldstein. And I'm going to introduce her in just a second. She has a fascinating background. She is president of JMB Insurance, which she joined in 2014, but she's a long history in insurance, starting actually at the age of 12. I'll tell you a quick story. I have a confession to make, which is that I love insurance. And the reason I love insurance, in addition to making me a really dull guy, I imagine, is the fact that I do think that is one of the most fantastic inventions, because the collective absorption of risk not only helps us all as human beings, whether it's burying your uncle or your parents or whatever, or dealing with risks in the economy. And I think the difference between modern commerce and ancient commerce really is the ability to trade risk and to be able to take new ventures and so forth. And insurance is such a massive part of that, and really a substrate for what is then financeable. And then I just kind of like the math. The fact that the average of averages has less variance than the average, I think is a fantastic thing, right? And helps us all. So let me just give you an idea of what we're going to be covering. We're going to go in terms of what the advanced of technology and AI is doing to ensure the legacy insurance model, some of the impacts on climate change and sustainability, and then what that means for changes in laws and regulations. As always, please feel free to give us commentary in the chat, and we will work your questions and so forth into the activity as we get going. Well, first, let me go ahead and properly introduce Kimberly. So Kimberly was telling me a story that she actually got into the insurance business when she was living in Montana at the age of 12, which is amazing. Started reading policies and so forth, and really was fascinated by the business. And then saw that was something that she would want to do. It actually did sell insurance as well, especially farm insurance. So as they say, nothing happens till somebody sells something. And then moved over to Seattle. And from there, started to grow into more complex areas, actually worked with private equity a lot, and became actually won the title of being a power broker, according to Insurance Magazine, and did that on the back of some of the work that she'd done in aerospace and defense. And you can imagine insuring things that get blown up on a regular basis is probably pretty interesting. And in addition, I was just asking her what her most fascinating insurance risk was. And she said, in addition to aerospace and defense, one of her customers has a pyrotechnics company. So just think about that, trying to figure out what the risks are of, insuring things that are made to blow up and explode. So kind of fun and interesting. Obviously a great executive to grow into the leader of JMB. Over $100 million of flow in that organization. And it is just delightful to have her here, somebody who really understands the business from the ground up and has done some fascinating work. So Kimberly, welcome to the Growth Innovators podcast.
Well, thank you so much, John. I appreciate your time today and the opportunity to be here. And welcome to those who are joining us on this podcast. A little bit maybe before we get started about JMB. It's a business that I absolutely love. And so I want to tell you, we're a boutique agency firm that consults on over 2,000 clients worldwide, predominantly in real estate, private equity, manufacturing, technology, and the mortgage banking sectors. We have a deep understanding of those interests of those industries, and it's kind of been our secret sauce to organic growth over the last few years. Mm-hmm. We really love serving our clients in those space, and we're grateful for them. And it's been a real challenge navigating this difficult market on their behalf. And given the things going on, I think it's going to continue to be challenging for a bit.
Yeah, it's so interesting. I think we have a theme that runs through the Growth Innovator series that we call the computability of reality. And what it is basically the knowledge of some phenomenon times how digitized it is equals its computability. And, as we look with sensors and, new kinds of technologies and prediction machines, and we'll get into, new technologies in AI in particular, the change of computability and therefore the change of risk is just going, kind of nuts right now. So, as you look at, and my sense is insurers have really only begun to kind of scratch the surface of what they could have for information. And there's some interesting models we can talk about, like Climate Corp and so forth, if we want to. But as somebody who's in the middle of really sophisticated buyers and complex risks, what kind of changes and things are you seeing in terms of digital disruption and new technology and AI and what it means for insurance?
John, it's really an interesting platform, and the world in which we live is going to change pretty dramatically.
Mm-hmm.
I think to kind of understand the complexity around technology and insurance, you've got to step back a little bit. The industry has always had difficulty adapting to technology,
Sure.
generally because there's not one singular platform on which we transact business,
Mm-hmm.
and there's lots of different ecosystems.
Sure.
So, today our poor clients are asked to complete lengthy applications with multiple redundant questions that can certainly be answered by AI.
Yeah.
On the broker side, we use agency management systems, which people might think are sophisticated, but they're really not.
Mm-hmm.
They're used to transact basically the fundamentals of insurance: certificates, auto ID cards,
Sure.
invoicing, and paying carriers.
Yep.
So
Yeah.
I think,
Mm-hmm.
Oh, go ahead, John. Sorry.
No. I was just going to say, I'm reminded of a friend of mine once said that, reinsurers are one part 21st century, one part 16th century. Look at the way they handle, things like the description of the risk and the transference of contracts and things like that. I mean, treaties, right? And it's just amazing, amazing world, as you say, partially, not using the kind of technology that's already there.
Yeah, it really is. It's funny because we look at a ton of technology platforms at JMB.
Uh-huh.
And right now, we haven't seen anybody that's fully able to interface with 100 plus insurance companies on mid and large size business, including, capacity players, which are changing a great deal right now. Your typical traditional insurers, wholesalers, and then the reinsurers that are starting to come direct.
Yes.
Into brokers, adds a bunch of complexity on how to deploy this technology going forward.
Yeah, and for our listeners who may not be deep in insurance, that last thing you said about reinsurers coming in direct, could you just explain that a little bit?
Sure. I had a meeting yesterday with a reinsurer who has lined up some fronting paper, and so now as a broker, I can go directly to the reinsurance capacity. And frankly, that saves clients quite a bit of money, because if you don't go direct to that reinsurance, you have to go to the carrier, buys the reinsurance. They take a fee for doing that. And then the broker places the insurance. They take a fee for that. And
Sure.
It kind of reduces that internal frictional cost when a reinsurer comes direct into the broker.
Yes, and just again, in case we have folks who aren't into insurance, just the idea in insurance, and feel free to correct me if I get this wrong, Kimberly, is that the insurance company writes a particular amount of risk cover, right? You lose your house for $1 million, here's the $1 million. Then they get 5 or 6 houses in the same neighborhood. They get worried that, hey, we got too much exposure in one fire. So then they take the first $3 million. They say, okay, we'll keep that on our books, and then we'll go to somebody else to reinsure the other $2 million. And that each of those stacks has an expected return on capital, a set of capital requirements, as well as broker fees to do that layer cake. Is that I know it's incredibly simplistic, but is that a fair rendition?
It's a very fair rendition and explained perfectly. And I think, post Ian, that is going to be a real challenge for folks. Most of the insurance companies' treaties come up 1/1. And that's automatic protection from reinsurers that they have on their overall portfolio.
Yes.
And those treaties we're hearing for January are going to have new holes in them,
Yes.
where the direct carriers are going to have to take on more risk and absorb that risk.
Yes.
When that happens, they have to go out and spot buy facultative insurance, which is going to continue to drive cost for cat exposed areas on, in particular, property insurance.
Yeah, no. And again, so that basically they're going to say something like, hey, we'll only do $10 million of reinsurance for this part of Florida, or for houses that are within this, distance from the coast or something like that. And then the primary carrier, like a Travelers or somebody's going to have to go out and say, okay, well, is there somebody out there for a higher price that will actually take those houses between the road and the beach in terms of reinsurance coverage? Is that right?
That's exactly right, John. And I think it's going to be really interesting, in particular in Florida, just to give you, an idea of what we're expecting.
Sure.
Pricing set aside, the reinsurers I met with actually yesterday were telling me that the minimum deductible in Florida for wind, which currently is 2% or 5%, is actually probably going to tick up to 10 to 15%.
I see.
That's significant risk transfer back to clients who have to absorb those retentions that are staggering.
Now, are technology, AI, or other kinds of analysis and so forth changing that, or that's pretty much the same, just with new analytics?
No, I think it is changing it a great deal. The carriers used to really track accumulations and model in Florida and in California. Mm-hmm. But today, that's not really where the losses are coming from. They're coming from all over the United States and Florida. California, we always have worried about earthquakes, but now we're much more concerned about fire risk.
Yes. Yeah. Well, I might be able to play a climate scientist on TV, and I actually know some climate scientists, but my naive understanding of it is that, when you're modeling a complex system over time, and this really gets us to kind of our second question around climate change. When you're modeling a complex system over time, one of the most difficult things is to estimate the endpoints, right? Because in a dynamic system, small changes reinforce themselves, and you can have a wide aperture of possible outcomes. So how do you think about that? Because from one point of view, insurance really is the study of history with a little bit of projection, right? And history may not be a good predictor for what we're facing now.
Yeah, it's true, John, and I think that's where brokers are challenged a little bit in changing the way that they negotiate deals. So internally, we have a modeling system. We pre-run models on our clients before we go into the market to anticipate, where we're going to have issues, and then look historically, at that particular asset to see if it has had claims in the past, and really what that looked like and why it might withstand, a severe event that better than any other thing on the block. So our job in negotiation with the carriers has really changed. And
so, Kimberly, is that traditionally a role for the broker to really have those sophisticated models?
No, it's not. And, we've had to partner with a group that does that for us. But in real estate, just given the number of assets across the U.S., if you look at what the carriers publish, I just had a client come to me and say, hey, I want to make some bets in Texas. Where in Texas should I buy? And if you look at the carrier's response on that, nowhere in Texas is safe. Well, that's just simply not true. And bets can still be made in Texas. So you've really got to dig into those models and look at the assumptions and have a whole different type of negotiation on your hands.
Isn't that interesting? It reminds me of the early days of folks like Progressive in the U.S. and Direct Line in the U.K., where I turned 65 this summer, and I'm not a Harley driver, but let's say I go out and buy a Harley, I get some whatever late life crisis. In the old days, right? Motorcycles, we don't do them, but some 65-year-old dude who buys an expensive Harley and takes it out twice a year, is not a bad risk. And I think that's what the Progressives of the world, discover. It sounds like you're doing the same thing. They're saying, hey, Texas is bad. You're saying, no, time out here. If we go the next layer down, there's actually good parts of Texas. And you folks are just categorically rejecting areas that have opportunity.
Yeah. And so, I think the brokers have to have that information on their side, because one of the things that started to happen was the carriers had a tremendous amount of power, because information is power. And so you've got to kind of match that now in your negotiation if you want to outperform the market on behalf of your clients.
Isn't that interesting? Yeah, it's funny. We're seeing that I mean, you see it in real estate brokers too, right? That the kind of sophistication that I just get for free from Redfin and Zillow and so forth. Hey, your neighborhood's gone up 10% or down 5% or whatever the average house is. I mean, that's the kind of stuff that I remember when I bought my first house, was actually value added hard work that the multiple listing service, broker would do on top of the generic information. And now it's just given away as a commodity, free, or not even a commodity, it's given away. And you're saying that you're seeing the same thing. You said data and information, but it's also analysis and intelligence, right? That you're putting on top of that to really add value. Sounds like.
Yeah, it definitely is. And it's all lines of insurance. If you think about, for example, cyber liability, the carriers can run vulnerability reports based on your website, right? And so in advance of our clients going into the market, we run those vulnerability studies and try and help them kind of manage their risk well in advance of submitting the applications in, so that they understand kind of what drives those pricing models and can take corrective action or pay the premium if that's their choice. But that role is becoming pretty important because cyber is certainly a volatile area, and pricing is going up tremendously. And the protection and loss control that you can do to prevent losses is helpful to clients.
Well, it sounds like that there's a whole kind of AI intelligence advantage that you're building up, both to get your clients, spiffed up so that they, are a better risk and they present better to the carrier community, but also, in terms of your differentiation and value add. Is that a fair assessment? Yeah,
that's a fair assessment, John.
And so, what are the kinds of things that you do to do that? Because does it change your talent strategy and the kind of people you look for? And it sounds like it would make the broker channel more capital intensive as well, more data, more technology, more models. I mean, how do you think about all that?
Yeah, it's absolutely true, John. I mean, our poor IT team at JMB is now plagued with helping us decode these reports that we get in so that we can explain to clients, because I think some of the hurdles in the pre-analytics that are done by the underwriters are you get a list of recommendations that the layperson who's not in IT doesn't even know how to articulate that change to the client. So your point about using our talent in new ways, our IT department is for the first time really involved with clients, kind of decoding what those reports mean and guiding their hands in practical ways to solve their risks.
It's so interesting. We did a big study for one of the name brand investment banks some time ago, and we tried to understand what's the organization form and the talent you need to have the best trading operations. And then we tried to, we successfully measured the productivity of those different trading operations. And you can imagine the performance curve is very wide, right? The worst trader to the best can be massive difference. And one of the things we discovered was that there's a very tight integration among the trader, the strategist, and the technologist. And so the molecule became the three of them together, right? And so at this particular firm, for example, they had the technologist was super important because they had massive amounts of server farms so that they could do complex simulations before the market would open. Like, okay, consumer price data is going to come out, and here's a trading idea, and then the strat would say, okay, and then here's the model, right? And then the technologist would then go and say, okay, well, I need to requisition 20 servers or 40 servers with these data sets and so forth, so we can run the simulation. And by the way, so we can also create essentially a pre-configured supercomputer so that when the market opens, we can watch these signals and affect our model, our trading strategy this way in the context of our model. So pretty, tight, sophisticated integration. What was interesting is that the cognitive overlap, that is the mutual understanding of enough of the other person's domain so they could speak at a higher level, was super important. So it wasn't that the trader understood the technology in depth, but knew enough to be able to speak in sophisticated language to the technologist, and likewise the technologist to the strategist, and the strategist to the trader. And that shared cognitive environment, if you will, that shared understanding, we found to be critical to productivity. So that it wasn't the old style, hey, look, write down your specifications, give it to the technologist then turns it into something, then gives it back. I mean, there's none of that, right? This was really deep collaboration and functional creation. Are you seeing a similar kind of thing?
Oh my gosh, John, it's so relevant what you've just said, because we do see that. There's got to be deep collaboration, certainly with technology, certainly with the models that the carriers are producing, and then the carriers and how they deploy their capacity.
Right.
So to solve this, technology issue that the industry is going to be forced to use, and it will be a really good thing for our industry. There's a lot of collaboration that needs to happen, because there are so many separate ecosystems within the insurance model that need to collaborate in order to really pull off a sophisticated strategy. But I think you've just given us a good example of a difficult and similar business that's been able to do that.
Yes.
And so insurance can find their way there as well.
Yeah. Well, it's interesting too that their willingness to pay up for the sophisticated technologists was also very high. So that let's say the trader is making somewhere between $2 and $10 million a year. The technologists are making $500,000 to $1 million. You know what I mean? So, and that's much higher than your normal quote unquote IT person, except if you're like a chief information officer or something like that. So they were willing to pay up in the talent pool to get that kind of sophisticated person who might know the mathematics or the science or the right all together, and be willing to spend their time doing financial trading. It's really interesting. The one of the things that we talk a lot about at Manifold is that there's really two kinds of philosophy of using digital transformation. One is what I think of as Taylorism, which is, Fred Taylor was the creator of scientific management, the person who worked hand in glove with Henry Ford on the design of Ford, the person that Karl Marx hated because you're taking the knowledge out of labor and putting it into the business system. And he didn't like Fred too much. And so I think that's a lot of technology's heart is automation for symbol work, right? But there's another whole thing that comes out of a lesser known person by the name of Doug Engelbart, who was the creator of the mouse and the augmented knowledge workshop. And according to Alan Kay, a friend of mine who's a deep computer scientist, he looks at Doug Engelbart, who just passed away recently, and says Doug Engelbart is to the personal computer what Isaac Newton is to physics, right? He's just a foundational thinker. And Engelbart's whole thing was, how do you get people doing complex interdependent work to have a higher collective IQ? Urgent work, so time pressure, urgent work. And that's why he invented the personal computer, right? That this is an artifact that's got a method and a language system, and if we can all work within it, we can collectively raise our IQ. And that's a very different production function than, Taylor was all about functional decomposition and the alienation of the knowledge from the individual into the business system. This is more about turbocharging the group to have a shared cognitive problem-solving space and then functional ability to make it into stuff, contracts or trades or whatever. So at Manifold, we think a lot about that. Which kind of work is this? Is this Taylor work or is this Engelbart work? Sounds like your folks, I imagine in the old days, brokerages were about Taylor work. Hey, take the order, check with the carriers, all that other stuff, process it efficiently, have a good search. I have knowledge of the relationship and the credit, but it sounds like you're going more toward Engelbart work, where it's really about collectively modeling and using intelligence and getting advantage that way.
Yes, and I think that's a really good example too, John, because we've got to process these tasks kind of behind the green screen really, really quickly now. Right. Because if we want to add real value to customers, we've got to slide over and make space for really good consulting clients. And I think clients are hungry for that. They're tired of wasting time kind of going back and forth on an application. And
Fascinating.
the way we look at it at JMB is you get about an hour of quality time with each client during the renewal cycle. Do you want to spend that asking 52 questions that are easy to find the answers to, or
Right.
do you want to find that helping them manage their risk?
Isn't
And
that,
yeah, so clearly the answer there is obvious, but it's about taking away, and technology is helping us with that kind of the minutia in insurance, so that we can really put on our big thinking hats and grow unique and new businesses.
isn't that interesting? So if I heard you right, if you have tailor-like work that you're not doing in an efficient manner, you can waste the time that you need to do differentiated Engelbart kind of work,
Yeah.
because you're just, doing stuff that you should have automated. Yeah, that
Exactly.
I think that I do believe that's one of the great challenges of modern management is to understand those two kinds of work have very different needs, and then understanding which is which and how do you, because sometimes you can take Engelbart kind of work, figure it out, and have it be tailor work, right? And how do
Right.
you do that? Um,
It's a big challenge for us right now, as we make this transition. And I think, the staffing pool is getting so short that we've got to get the tailor work under control and automated as much as we can,
yeah,
to continue to evolve and elevate ourselves in this new and choppy future.
yeah, for sure. And I imagine that the AI technology revolution, all of that stuff is accelerating that. And I imagine climate too is also taking stuff that used to be, it's the phrase known unknowns and unknown unknowns. Anyway, I forget that whole whatever Rumsfeld said, whatever but I mean, stuff that used to be solid, right? As you said, used to be Texas and Florida or whatever. And now it's like, wow, it could be anywhere in the United States. I mean, those verities are no longer verities.
Well, if you think about that a little bit, right now, if you're looking at 2022,
Yes.
there have been 15 multi-billion-dollar events already this season in the U.S. alone. So that's kind of a staggering number.
Yeah.
2 of them were hurricanes,
Yes.
but the others were just other weather events like drought, tornado.
Wow.
So if you kind of tuck your brain around that, you've got big events, of course, down in Florida,
Right.
but the carriers that used to just model kind of Florida and hurricane risk and
Yes.
earthquake risk out in California,
Yep.
are missing the boat today because of climate change. If you look at what's really driving the industry, and if you think, wow, that's happening in the US, when you look at the global market, the numbers are very similar outside of the US. And I think that's a real fine point, that climate is having a tremendous impact on the insurance industry overall.
Yeah, it's funny. What would have been typical if it's 15 this year? What would be, what would have been the traditional number?
Yeah, it's been ramping up to around 15 for a while, and that's really why the market had to change so
Yeah.
dramatically in their pricing and their retentions, and it really forced them into the AI game for modeling risk. It became a much more serious science to them as the losses continue to get more severe in those areas. So, you used to be able to kind of predict, you knew if you had risks in Florida or California, it was going to be tough. Now, it's across the United States because population shifts and
Yeah.
risks are just changing.
Yeah, it's funny. I have some climate denier friends who, think it's a liberal hoax, and I said, yeah, of course. I learned about climate change, 20 years ago from those two very liberal, crazy institutions, the U.S. military and reinsurance, widely seen as communists. Anyway, whatever. Let's not go there. So as you think about really if we dive into this whole thing about the technology and so forth, has it changed, how you sell, to get real granular, in terms of how you sell and service your clients? I mean, is it different? Do you have shared information environments now? Are you presenting different kinds of models? I mean, how on a very tactical, practical level, how do you think about it differently if you do at all?
Yeah, no, we definitely do. And, we're actually piloting a couple of programs. I don't know how these are going to work yet, but basically the sale-less sale, right? We see opportunities for what we call embedded insurance, real opportunities to sell a different way. And
Mhm.
then your SEOs, catching people when they're Googling, I need insurance in California, and driving them to your website with
Yes.
a quick AI platform that they can respond to their immediate need
Mhm.
as really interesting ways to drive new growth in organizations. So we're just scratching the surface of that. We certainly don't have all the answers, but it is something that we're actively looking at. And if you think about it, when you're getting a mortgage on your home, isn't that the right time to buy, homeowners insurance? And
Mhm.
that's really what embedded insurance is,
Mhm.
partnering with new players to
Yes.
sell insurance at the point when people actually need it. So the sales process is changing rather dramatically
Uh-huh.
as we do that. And part of, on the flip side, that works for really smaller business right now, but we do see a path where that can certainly grow and go upstream. The competitive forces there are really that the technology is pretty expensive, and if you just can sell it on smaller business, it's hard to outrun those numbers. And
Yes.
that's one of the impediments to entry here. And I think there's a lot of fear in the industry, both on the brokers and the carrier side, on making the right bet on technology, because there's a ton out there
Yes.
and you have to make a bet, but what is the right bet?
And what are some of the considerations you have as you think about the different technological options?
Yeah, I think it's, kind of running down the same rat hole. Part of the problem that we've got in insurance today is our systems aren't cohesive and connected together.
Right.
And so, for example, when you go from the insurance broker to the carrier, there's no interface there. And the carrier systems are so old and they've got so many legacy systems,
Sure.
we really can't talk in an efficient way. And, overcoming those hurdles is interesting. And you have to overcome those hurdles with over 100 insurers with which you transact business.
Sure.
From that, some of the carriers I think are really making bets and ceding their capacities over to MGAs as a way to test technology and hedge their bet a little bit on what direction they want to go technologically to capitalize on the future.
And again, for our non-insurance folks, could you just explain the master general agent and how the MGA concept?
Yeah, the MGA is really the carrier gives you your capacity as an MGA to
Mhm.
underwrite on their behalf.
Yes.
And what that allows us to do is, as an MGA, you can put in a slick, nimble system that the carrier really can't support,
Right.
take your capacity instead of asking for it each time you do a risk, and
Right.
underwrite on their behalf.
Yes.
So it's kind of a blending of the broker and the insurance carrier. The problem today with that model is, we've got 600 new MGAs that have popped up.
Hmm.
And as a broker, each one of them has a very limited, narrow niche that the carriers are allowing them to underwrite on behalf of.
Right.
And we like to make sure we don't miss a market on behalf of our clients.
Yes.
But adding 600 new players into the mix and being able to navigate that has become challenging. I think what's interesting to me is the wholesalers are really stepping into that arena.
Yes.
So I had dinner with a wholesaler last night, and they've got systems now that take all the appetites of those 600 MGAs and 100 insurance carriers, and they can quickly identify which ones might be a good fit for your particular risk.
Yes.
That's pretty invaluable as you're trying to navigate that enormous marketplace to get to the right answer for your client.
And again, can you just spend a little time explaining a wholesaler?
Sure. So, the insurance broker has direct market access, but there are some insurance carriers out in the market who like to limit their access point. And so a wholesaler is a broker's broker. We go to a wholesaler to access markets that we don't have access to and won't directly contract
Hmm.
with brokers and agents. So we'll use them to help us get to, more challenging risks generally get funneled into wholesalers to fill out capacity.
Yes.
And the way they're filling out capacity today is very different. If I bring a risk in and I've managed to put together on a difficult risk 50% of the capacity in the standard market, they have a consortium of insurers that have bonded together that might just slap the rest of that capacity together on the back end. So without even underwriting, because they're trusting that the first 50% of that risk was done by people who really thought through the risk.
Yes.
So our world is really changing, as a broker, and how we broker deals in the wholesale market. And then your direct reinsurers are also coming into that game, which is fun and fascinating, and certainly changing the way we broker deals at JMB.
It's so interesting. I don't know if you know the work of a English and then became American economist by the name of Ronald Coase. But he came up with this idea of transaction costs, and he came up with it about the year I was born. I was born in 57, 58. Wrote a book on it, I think, at 59 on transaction cost theory, and he won the Nobel Prize in economics for it in 95. It basically said that organizations will grow until the transaction costs are cheaper out in the marketplace than they are inside the organization. So you look at somebody like Google, what used to be in a much more diverse and complex market, classified advertising, Google lowered the transaction costs for that and sucked them all inside one entity.
Yeah.
Right. And so, so it can go that way. Or if you look at a, modern automobile, you buy some components and so forth, the value chain of an auto business with Henry Ford started fully integrated. And then as transaction costs came down, became much more disintegrated. And then, the car companies keep certain components and so forth, but they sub out tons of things. Ford had, rubber plants in Brazil, right? Because he was the first person to do it. Railroads, the whole routine, he built them. What I hear you saying is that the transaction costs are going all over the place, right? Sometimes the wholesalers are coming into the market. Sometimes the brokers are taking things out of the insurer and moving them into the MGA. U.S. brokers are taking on assessments that may not be full on underwriting, but look like a step just before underwriting. So the transaction costs are moving functionality all around the value system of insurance. It seems like.
That's exactly right, John. I think that's a good summary, really, of what we see today. And, then the bet really is, what kind of technology do you need, and can you go upstream? I wish that it was more cost effective to make that bet today. It is a very expensive bet, and it'll weed out, a lot of smaller players, I think, as we move forward in this brave new environment. Because if you don't adapt, you're not going to have the staff that you need to run the business anymore, and you're not going to have the speed that you need to move at to be successful.
Yeah, it's interesting. One time, my co-author Jeff Rayport and I wrote this thing ages ago on managing in the market space and exploiting the virtual value chain. And we're having lunch with an eminent historian by the name of Al Chandler. And Al recently died about 3 years ago, and he won the Bancroft Prize and so forth. His whole thing was the chronicling of managerial capitalism as an invention. So one of his masterworks was a book called The Visible Hand. So from Adam Smith's Invisible Hand to the visible hand of management, right? And I remember it was the early days of the internet. We're having lunch with Al, and he said, first of all, he said, the stuff you guys are doing is new, which made me feel, I was young, whatever.
Yay.
Al Chandler, wow. I tell my wife about that. The other thing is, he said, a lot of people are going to think that what the internet and these new technologies are going to do is to decrease transaction costs and make everything into a market. He said they're wrong. It's going to reconfigure them. And and he said, it's your job to figure it out. It's like, okay. Yeah, but it's this reconfiguration, right? It's not just a universal, as you said, the brokers are more capital intensive. You have to make bets. I can hear the the managerial worry in your voice about, hope I'm making the right bet. Those are That's not decreasing your investment. You actually have to increase your investment and make
you have to increase your investment, and you have to make sure that the platform you choose is the right one. We actually spent 2 years building out a platform with a digital technology group that we're about to make a bet on, and it's very exciting, and it's just what you have to do, I think, today to stay relevant.
Yeah, so interesting. And so, Kimberly, what do you think that general managers who run businesses and so forth need to understand about how to think about risk with this combination of new technologies and climate change and other, you think of mega trends? Like, what do you think that, because you're in the business, that you wish executives more broadly knew?
Well, I think, you need to understand your risk as an organization and then what you can do about it. And I think, setting yourself up for being a better risk in the view of the insurance company's eyes. There are a lot of ways. We used to rely on old school safety and loss control. But if you even take something as small as an auto today and you look at all of the technology embedded inside an auto, you've got GPS and sensors that sense how close you are to the car next to you and backing up cameras.
Yep.
It just stands to reason that those built-in technologies are going to drive risks down. And it should make insurance cheaper to deploy.
Sure.
And so I do see that AI has a big role in that, but being able to articulate that to the markets and get the appropriate credit for it, if you're above the peers that you're operating in, is really important. And we're seeing all kinds of sensor technology kind of coming out. We certainly make a big deal on our construction projects that we're doing if we're using, sensors for water intrusion and things like that. And we do catch losses earlier than we used to, and we're able to remedy that faster if it happens off hours, which saves carriers money and makes that risk a better risk. So being able to kind of demonstrate that technology does still come with some downsides. So let's take an example. If you use a sensor in concrete to determine the integrity of that concrete over time, you better hope you're not going to get a false positive read from that sensor, because what do you do with it once you've got, a 50-story building built? So, it's technology that is certainly going to help our industry overall. Deploying that and articulating that to the carriers and getting the appropriate credits for it is really how people are gonna really differentiate their risk, I think, in the market going forward. And the models don't account for that. So that's still, a negotiation and a deal that you've got to kind of bring to the attention to get more favorable pricing.
So interesting. So really communicate the risk implications of, excuse me a second. Pardon me. The risk. Thank you. The risk implications of your information advantage, if you will.
Yeah.
If you have one. And fascinating, as you said, like what's considered, regular practice or expectation. Like, if like, I know, I remember when I was a kid, we were skiing and they stopped posting at this particular mountain I was skiing at. They stopped posting "Don't ski in the trees" because they had found, from a liability standpoint, that by putting that warning up, they actually were seen as more involved in the safety of the people skiing in the trees. It's like, it's like, so as you say, you put a sensor in there and you get a false positive, or you get, it's like all of a sudden that your expectations of what's regular practice starts to change a little bit, and who should own
it. And then how do you solve that problem? If you get a false positive after you've thrown the building up, right? So how do you address that? And of course you can test the concrete and do things like that, but there's some positives to knowledge and also some kind of scary factors.
Sure. Well, I think that's a good place to take us to our third area of question, which is about law and regulation. That
Sure.
What do you see happening? I'm always fascinated by. I think that we're at the very early and primitive days of what I think of as symbolic property. You know, like our, in addition to our behavior here, right? The system knows our geography.
Yeah.
It can interpret, actually, from some algorithms from Carnegie Mellon. It can interpret, my stress level, my age, my weight, my blood pressure. We can probably do with speech act theory, guess as to, how well our relationship is going. This is all derivative information,
Right.
that wasn't available when Alexander Graham Bell was, reaching out to Watson, right? So, how do you think about laws and regulation in the context of all this new technology and new kinds of risks?
I think it's necessary, and understanding the boundaries of what is acceptable to use and still keep customers' information private is going to be a really fine line. And so I think if we look at the regulatory outlook kind of coming, to us, it's all about privacy and securing the right information and only sharing what we can share, either through an NDA, right?
Mm-hmm.
Well, what we've signed off on NDAs,
Yes.
or what's just available as public information. How can we use that and not violate that trust?
Sure. Yeah. Well, it's going to be interesting. We were doing some work with some carriers some time ago. These were property casualty carriers, and they knew through analysis that there was good underwriting information, social network analysis, but they did not use it because they're afraid of the regulatory implications.
Right.
That it took them long enough to get credit information in there, and so forth, and they just were not comfortable using, your social graph as a way to say, yeah, this person's probably good risk or bad risk.
Right. And I think, like the Insurance Data Security Model Law 668 is interesting. And I think is starting to get at the heart of the data security and the standards, that are going to be set forth in this brave new environment, because things are changing very quickly. And, understanding what's inbounds and out of bounds is becoming a little murky.
Could you? I'm not familiar with the law. Could you just describe, broadly what it covers and the kind of principles it has in it?
Yeah, it's really all about what you're allowed to share, what is truly public information, and what
Yes.
is secure information that you shouldn't release.
Yes.
And it's really going through the commissioners, and as regulatory issues, insurance are state by state.
Sure.
So part of the challenge we have in insurance is understanding what states are adopting, which ones aren't adopting,
Sure.
and then how they interpret it in every single one of those states.
Yes.
But for sure, privacy and managing people's security and their information is going to be a really critical thing to understand, as we deploy all these new technologies in insurance.
Yeah, I always think I don't know if you ever saw the movie Brazil with Terry Gilliam. You have to check it out. It's
I'll write that down.
Yeah, it's and Robert De Niro's in it as well. And it's not a digital future; it's a pneumatic future. And the hackers are the plumbers, because they're moving the information tubes like in different places. And so Robert De Niro's a hacker plumber, right? And Terry Gilliam, what happens is that they have this big typing pool, and something drops down while they're typing the stuff up before they put it in the package and send it off. And he's misidentified, and then goes to this horrible thing where he ends up in jail and blah blah blah. And it's all because something dropped down in the typewriter while it was happening, and that was stuffed in a tube, and that tube went anyway. So
well, Lord only knows I don't want to be the guy who messes up the tube. Jail does not sound appealing.
Yeah, no, but it's a wonderful alternative dystopic future. Anyway, how do you, just as an organization, as a leader, how do you think about planning an environment like this that seems so dynamic, right? You've got, the differentiation of your firm is dynamically getting more complicated and so forth. You have a very complex regulatory environment that goes across all the different states. And having come from Massachusetts, and living now in Illinois, one could argue that they're a little wackier than normal kind of states when it comes to this stuff, but that's up for debate, I guess. And then you have a risk profile, a set of things happening literally in the environment that are dynamic and non-traditional. How do you, as a leader, kind of plan in the context of all that?
Yeah, I mean, I think you just need really good advice, and you need to upgrade, talent and have more diverse thinking inside your organization, right? We're embedding legal teams. We're not a large agency, but we're still embedding legal teams to help us think through some of these issues.
Mm-hmm.
We're embedding technologists to think through issues of digital platform. And really trying to understand the full landscape on how to deploy all of this in a safe and compliant way for our customers without violating any of their trust.
Could you go a little more into Kimberly, in terms of what you look for? Because, lots of people talk about, we have diverse thinking and so forth. Sounds like you're doing interdisciplinary teams. My belief is one of the hardest things to identify about a human being is their thinking diversity. And diversity in general, is important for lots of reasons, societally as well as performance-wise. But then the thinking diversity, lots of times, I've been in settings where people are diverse by traditional measures, but their thinking diversity is very compact.
Yeah, it's just choosing people who aren't just like you, right?
Mm-hmm.
It's getting comfortable with being uncomfortable. Mm-hmm. And I think, you might not want to hear what that attorney who doesn't believe in the process you're running is saying, but you really need to think and listen and hear. So, taking in tough messages, synthesizing them, running them through your thought process is important, and not having group thinks, I think is terribly important. So we're looking for people who might have contra views to what we're trying to do. It's probably more important to understand how people think you're going to fail than actually failing, right? You want to look at the dark side of it and listen to the people who don't think what you're trying to do is going to work and why, so that you can take some of those pitfalls out of the way. You're still going to move on your mission and try and move something forward, but you really need to take the time to hear what everybody is saying and involve people that you just might not naturally agree with to get their opinions, so that you can make the right bets.
Is there a particular set of attributes or background that you look for that? Because I remember one time I was reading about Isidore Sharp, the guy who started the Four Seasons. Then he sold it and they bought it back again, whatever. And he said something very interesting, which is, he said, we used to hire for talent, and then we would try to train customer service and a spirit of service. And he said that was a losing proposition. He said, if somebody doesn't have that kind of service attitude, you can't put it into somebody. So he said, we started to hire for the service attitude, and then we can train them into anything. So he flipped the model. Are there specific things that you look for where you say, okay, here's a person who can live in an environment of where they can hear different kinds of thinking, listen to it, move forward?
Yeah, at our agency, we've got good senior leadership with very diverse thought and thinking, and that's really beautiful. And we call it fighting like a family. We'll sit around a table and have an honest conversation and really plow through everybody's different thinking on whatever topic that we're trying to chew through at the time. In terms of bringing new people into our organization, we really hire a lot of people straight out of college in our organization.
Interesting.
And that thinking of folks who aren't mirrored in the history of insurance is very helpful. It helps us think through our digital platform, our digital strategy, how people are going to consume information. With the baby boomers leaving this business in short order, we're going to be turning the business over to those folks. So, kind of bringing them into the thinking has been invaluable to us as we craft an organization for the future.
So say more about what fighting like a family is like for you. There's a lot of families out there, right?
Yeah. Well, it's not being afraid to really speak your mind and not do a group thing, right? We want to reward people who really have the courage to say, I don't believe in that, and here's why. And really taking the time to kind of understand where people are coming from will get you to a better answer long run. And that's really what we call fighting like a family. It's okay, to sit and really knock around, an idea and flush it out from multiple perspectives. And so many of the younger folks that we're hiring into the business are afraid to speak. Giving them time and the platform to say, what do you think? Really, honestly, what do you think? And driving into that and understanding it, it's important, I think, as we form, because ultimately that's our new buyer, that's our new broker, that's our new capacity. Right. And we're building a future for these folks when all of us ultimately retire and turn this business over. So we certainly need to plan around that.
But it also sounds like you have some norms around, hey, look, and I imagine this is happening in very senior meetings too, you're making the time for the new people to, to really express themselves and encouraging them and getting them to get on the record for, what their diverse thoughts might be. Am I hearing that right?
Yeah, you are, John.
So interesting. I have a dear friend, Saj Nicole Joni, who wrote a book called The Right Fight. And she said, look, all healthy organizations fight. And she said, at the highest level, there's two things. You have to fight about the right things. So you're not fighting about trivial, you're fighting about, risk or models or things like that, not, whatever, something else. And then you have to fight right, which means fight like, I think in your language, fight like a family, which means you can come back. You do it in such a way that you can come back and fight again another day.
Right? Yeah, you can't break this is basically our rule. You're not going to be in trouble or penalized for your free thinking. Please just throw it on the table, be honest and support it so that we can all understand your perspective. Yes. And if we do that as groups, we really do come to better answers. We're not just wedded to the answer. We're malleable and able to change and be reflective about other people's viewpoints.
Isn't that wonderful? That sounds like a great place to start. You can't stop. You can't break this. So that's a wonderful and difficult, I think, challenging culture to keep alive and to flourish. So good on you. Well, I just on behalf of our audience and Manifold and so forth, Kimberly, I just wanted to thank you so much for participating and being part of our Growth Innovator family. And thanks also for sharing not just the, kind of the hard science, economics and so forth, but really the culture and the fabric of, how do you get to fighting like a family in the context of risk in a dynamic organization. So thank you so much for sharing that. And it's just fascinating. And may you have great success going forward.
John, thank you so much for your time. We're grateful for being asked to participate and wish you much luck in the future. So thanks for the time.
Oh, our pleasure. I am now going to just give an idea of what we're going to do next month for our Growth Innovator series. So we went through our agenda and questions. I talked about computability. Let me give just one notion of the rest of the story. For folks who don't know, insurance and its concepts have been around for a long, long time. If you look at the laws of Hammurabi from about 1750 BC, there actually are a number of laws that deal with loss and claims and the nature of payment necessary to deal with the merchant ships that were sailing from the Hittites at that time. So it's really a deep and ancient tradition. And for those of you who don't know where the word underwriting comes from, my understanding of it is that there was a description of a risk. So, 3 ships going to the new world and we need 10,000 pounds, and somebody would say, I'm in for 500 pounds underneath the description of the risk, and then you'd sign your name. Hence, you would write under the risk and make your commitment. So it's an ancient and venerable profession that we, I think, all benefit from. If you want to know more about this, we do this under a Creative Commons license. You can feel free to reuse this material. And also, we'll be happy to engage if you're curious about what we talked about here, anything that you would want from Kimberly and other parts of our Manifold family. Let me just set up what we're going to do it next month on November the 18th, which is going to be a little earlier because of the Thanksgiving holiday. We're going to have Sarah Grooms, who is the Senior Vice President of Digital Transformation at Wintrust Financial. So we're going to continue the combination of digital and financial. And, she's just had an amazing career in terms of large-scale change and transformation and what it really means in an organization that existed before the digital transformation, but certainly has digital at its heart. And it is both the manufacturing as well as the consumer interface and the driver of productivity. And she is right in the middle of making that happen. So couldn't be a more capable speaker on the topics that really concern us here at Manifold, which is how do you innovate in a growth manner in the context of a digital reality. So thanks all for coming. Look forward to talking to you next month.